You have got a Rama's capital, you have got a Krishna's capital. Question of statement of it does not arise at all because we already got the capital. The difference is net profit 63,110 equally distributed. Rama gets how much? 31,555. Krishna gets 51,555. Opening capital of 33,000. He put an additional capital of 4,000. Your net profit is 31,555. Hello, my dear students. I am Dr. B.S. Subramaniam, called by name Dr. B.S.S., Professor in Commerce and Management, Vidhyaashram First Aid College, a Temple of Excellence, MYSURU. In this session, I am going to hand Advanced Financial Accounting, Second Semester, Unit 1, Session 5, in favor of accounts from incomplete records. These are all the fifth session which I am doing. I already told you what is incomplete record is nothing but a single entry. Here, when you are going to prepare what's called trading and P&L account and a balance sheet, single entry will be converted into double entry. Single entry means one-sided entry. For every corresponding debit, there is no corresponding credit. That is why it is called unscientific method of recording the business transaction. For every corresponding debit, there must be a corresponding debit that we can't find out in the incomplete record. That's why it is called incomplete record. So they may prepare personal account, sometimes maybe real account, but they can't prepare all the types of account. So we converted into double entry principle. We have to prepare debtor account, creditor account, statement affairs, then cash account, then trading account, P&L account, and a balance sheet. Generally, the preparation of single entry to double entry goes, we have to prepare a debtor account, we have to prepare creditor account, we have to prepare BR account, we have to prepare bills payable account, we have to prepare cash account, then statement affairs, then trading and profit and loss account, and a balance sheet. We'll move on to problem now. So this is a problem given. The books of Rama and Krishna, who are maintaining records under single entry, show the following figure. So they have given 1184, 31st December 84. When they given 1184, you have to calculate the capital, but capital is given. This is the opening date, this is the closing date. Okay. One. Then analysis of cash book means you have to prepare the cash book. So collection from debtor will come on the debit side, cash sale will come on the debit side, discount allowed won't come, addition capital from Krishna I have put in debit side, business expenses credit side, drawing by Rama credit side, drawing by Krishna credit side, paid to creditor credit side, discount received won't come because it's a non-cash item. Outstanding expense at the end of the year is 290, reserve 5%. This RBD fixed asset to be depreciated by 20%. Now, what are the things to be bear in mind? For every problem, we have to prepare debtor account and creditor account. If analysis of cash book is given, you have to prepare the cash account. There's a maintenance. Then, but they have given the capital already. We have got a Rama's capital, you have got a Krishna's capital. Question of statement of it does not arise at all because we already got the capital. Now, go with a debtor account to find out the credit sale. We started with the opening balance of 60,000. Cash received from the debtor 2,70,000. Discount allowed 2,800. Closing debtor is 70,000. The difference is 2,82,800 is the credit sale. So you have find out the credit sale here. Started with the opening balance. How much cash means how much have to receive from the customer? 60,000. There was a credit sale of 2,80,000 is not given, it is missing. How much cash received? 2,70,000. How much discount allowed? 2,800. How much carried down? 70,000. The difference is 2,82,800. Nothing but the credit sale. Then we move on to total creditors account to find out the credit purchase. We start with the opening balance of 46,800. We paid to creditor how much? 2,24,000. To cash. Paid to creditor 2,24,000. Discount received is 2,400. Closing creditor is 37,000. Totally 2,63,400. The difference is 2,16,600. We'll move on to cash book now. To find out the closing cash balance of we start with the opening balance of 6,800. If you see your cash account, you can understand how much is there. 6,800. Question mark means you have to calculate the closing cash. We start with the opening balance of 6,800. How much money you received from the debtor? 2,70,000. Addition capital introduced 4,000. Cash sale is 32,000. Totally it will work out 3,12,800. How that we paid to creditor how much? 2,24,000. Drawn by Rama, 7,200. Drawn by Krishna, both are the partners. Here, 13,200. Business expenses is 35,700. From this figure, if we deduct these three, whatever the difference comes, that is a closing cash. Then you move on to trading P&L account. Here, to find out the gross profit or gross loss, we start with the opening stock of 44,000. How much purchases there? 2,16,600. Made a sale. Credit sale is 2,82,800. Cash sale is 32,000. Totally, this will come 3,14,800. Your closing stock is 50,000. Difference is 1,04,200 is the gross profit. Then we move on to then by gross profit brought down 1,04,200. By discount received 2,400. To discount allowed 2,800. To business expenses 35,700. To outstanding expenses 290. It is in the adjustment. Reserve for doubtful debts is 5% on debtor. Your debtor is about 70,000. 5% of this is 3,000 fund. Division on fixed asset. Your fixed asset is 60,000. 20% on this is 1,200. The difference will work out 63,110. So division on fixed assets is nothing but, if you see your fixed asset, you can understand. Come back here. 6,000 is there. 20% of this 6,000. On this 6,000, we'll get 1,200. 10% means here 6,000 is there. 20% of this, 20% will go to 1,200. Then 5% on 70,000 is 3,500. Difference is 63,110. That should be distributed equally. Rama get how much? 31,550. This is half. This is half. They will get equally half of that, half of that. That's 63,110. Then go to the individual. Closing cash is 39,900. Your debtor is 70,000. On that 5% RBD is 3,500. So it will work out 66,500. Your fixed asset is 6,000 minus depreciation 20%, 1,200. Now it's working 4,800. Your closing creditor is 37,000. We started with the capital of Rama. Your opening balance is 7,000. There is no additional capital. The net profit of this year is 31,555. It becomes total capital 68,555. How much is drawn for personally? 7,200. The net amount available is 61,355 in favor of Rama. Then, in favor of Krishna, he started the opening capital of 33,000. He put an addition capital of 4,000. Your net profit is 31,555. The total it will come 68,555. Out of that, he drawn personally 6,000. The net amount available at the end of the year is 62,555. There was an outstanding expenses to be paid in the adjustment 290. So it will tally for 1,61,200. The total balance sheet tally is 1,61,200. So very easy. We'll move on. So here they have given the opening balance. Actually, you have to calculate the statement of it to find out the capital. But they have given the capital. The question of capital does not arise at all. Here, The cash is 6,800, closing cash. They have put the question mark. That means you have to prepare the cash account. Debtor account and the creditor account is compulsory. So to find out the credit sale, by to balance brought down, by cash, by discount allowed, by balance carried down, the difference is 2,82,800. Then creditor account, by balance brought down, to paid to creditor, to cash, to discount receipt 2,400. Closing creditor is 37,000. The difference will work out 2,16,600. Then cash account, it start with the opening balance of 6,800. How much receipt from the return? 2,70,000. How much additional capital put? 4,000. Sales 32,000. Creditor, we paid the creditor 2,24,000. Drawing by Rama, drawing by Krishna, totally he draws 13,200. Business expense is 35,700. Balance carried down is 39,900. Then trading profit and loss account, we start with the opening stock. We made the purchases, sale, credit sale as per the debtor account, 2,82,800. Cash sale as per the cash book is 32,000. It becomes 3,14,800. Your closing stock is 50,000. The difference will work out 1,04,200. Then we have to prepare the profit and loss account by gross profit brought down, by discount received 2,400, discount allowed 2,800, business expenses 35,700, then outstanding expenses 290, RBD on debtor 3,500, division on fixed asset 1,200. The difference is net profit 63,110, equally distributed. Rama gets how much? 31,555. Krishna gets 31,555. Then go to balance sheet. We start with the balance sheet. Cash is, closing cash is 39,900. Debtor is 70,000 minus RBD 3,500. Difference is 66,500. Closing stock 50,000. Then fixed assets 6,000 minus depreciation 1,200 become 4,800. Then Krishna's open capital is 33,000. He put in additional capital of 4,000. Then he got a net profit of 31,555. Total amount available 68,555. Out of that, he drawn for personally 6,000. How much net amount available at the end of the year is 62,555. Unpaid, outstanding expenses mean unpaid expenses, not yet to be paid, 2,90,000 outside that will be paid in the next year. Still, it's an outstanding for the company. Hope you understand. So I put about the 5 session. I complete all types of questions. No, preparation of debtor account, preparation of creditor account, then how to prepare BR account, how to prepare bills payable account, cash account, trading and profit loss account. If you refer this questions and answer, definitely it will help you. So 15 marks, one major question of 15 marks, one 10 question they may ask debtor account and the creditor account. Format should be pakka. How to start with the debtor account? To balance brought down opening debtor, to credit sale, then by cash receipt from debtor, by bank check receipt from debtor, by BR receipt from debtor, by discount here no, by discount allowed, by sales return, by admission. What's how it will go? By cash receipt from debtor, by bank check receipt from debtor, by BR receipt from debtor. Your debtor account will be sales return. You have got then discount allowed. You have got allowances to debtor all will come, and bad debt will also come. The closing balance, whatever the difference is, balance carried on debit side, to balance brought down opening debtor, to credit sale, to BR dishonor, to bank check dishonor. Whatever the dishonor is there, check discounted and dishonor will come here. To cash paid will come to debtor. Cash received will come on the credit side. Cash paid will become on the debit side. Then whatever the difference comes, there's a closing debtor. Learn the format properly. Debtor account and the creditor account. Opposite to debtor account is credit. By balance brought down. Opening creditor, by credit purchases, to cash paid, to discount received, to By BP, you received BP dishonor debits. By balance brought down, here you got by balance. So then by credit purchases, to cash, to bills payable, you have paid that. BP is dishonored credit side. Your creditor account will be raised here. Discount received, all will come. Then closing debtor, whatever the difference comes, there is a credit purchases. So learn the format of debtor account and the creditor account that may help you for 10 marks. On 15 marks question, you have to prepare debtor account, creditor account, cash account, statement of affairs, then trading and P&L account and a balance sheet. Hope you understand. We'll meet in next session with the second unit of hire purchase system. We'll deal with hire purchase system from the next session. Till then, goodbye. Meet in the next session.